Good morning. Our stock in focus today is tobacco company BAT. Affin Hwang Capital is keeping its sell call on the stock with a lower target price of 9 ringgit and 20 cent versus its last closing price of 10 ringgit and 76 cent. The near-term outlook remains highly challenging for BAT. The illicit market is still a major problem. 69% of cigarettes and vape products consumed here are illegal. Without more radical enforcement measures, it's hardly likely that we'll see any sizable impact on the black market anytime soon. BAT's market share has also been dwindling, down by 21% year-on-year in the first quarter versus the overall industry's contraction of 11%. That likely means its rivals Japan Tobacco International and Philip Morris International have more effective marketing strategies and better brand appeal. Meanwhile, price hikes in legal cigarettes over the years and the rising cost of living have, by and large, compelled smokers to look for more economical variants. The 5 ringgit price difference means more people will turn to BAT's Rothmans at the expense of its higher margin premium brand Dunhill. That will exert more pressure on the group's margins. Affin Hwang expects BAT's near-term earnings to stay volatile. It sees 2020 core earnings sliding by 30.2% year-on-year to 252 million ringgit. It trimmed its earnings forecast by 1% for 2021 and 12.1% for 2022. Meanwhile, its dividend yield of about 7% may not be appealing enough as payouts have been shrinking given the extremely challenging operating environment. So what's the consensus? Analysts are pretty split on this one. We've got 4 buys and 2 sells in the past month, with target prices ranging from Affin Hwang's 9 ringgit 20 to MIDF's 15 ringgit and 70 cent. That works out to an average of 12 ringgit and 99 cent. BAT last closed at 10 ringgit and 76 cent.